Welcome, welcome, welcome to the Week 10 recap. And what a week it was! Quite the doozy. All right, so as usual, we're going to go over the activity for the last week and then get into the overall account balance. So, starting off the week, we had our third JEPQ dividend payout of the year. So, this is our March. So we're paid 58.49, and then that was reinvested. And for the first time ever, we were able to buy an entire share, actually over a share, with our dividend. So again, we were paid 58.49. The price of one share at the time was 54.10. So we're able to buy 1.081 shares. So I think the last couple reinvestments have been, kind of 0.95, 0.94 a share. So kind of a milestone that we're able to now buy whole shares with our dividends. Okay. So for this particular reinvestment, the share price was down a little bit, but also the dividend itself was higher this month than past months. Yeah. Then we had a expiring Nvidia trade. So this trade was, I think, probably one of the first losing trades that I've had on Nvidia since starting to sell puts on it a few months ago. So this put expiring March 7th at the 117 strike. I think I sold this for about 275, and at the kind of towards the close of last Friday, I was at 485. So again, if you're buying the put, that's what you want. Typically, you want to see the value increase, but if you're selling the put, you want to again typically see the value go down. Uh, and so I had a few options there. I chose to do a roll was called a roll down and out, where I bought the I bought the put back for 485, just rounding the cents. So I bought the put for 485, and then I sold a new put, so basically a roll. So closing one leg, starting a new leg. So I rolled down to the 114 strike price, and I rolled out from the 7th to the 21st, so 2 weeks out. Okay. And for a net credit of about, it was like 170, 165, somewhere around there. So what that does is that puts more money into the account, and also the actual amount I need to have secured, which was 11,700. That's now 11,400. So I'm getting paid to risk less money. Um, so that's one way of looking at it. Of course, a net roll for credit doesn't a net credit roll doesn't always mean that it's in your best interest. You could be just kind of kicking the can down the road and making a bad situation worse. But I think in this case, it was the best thing to do. Okay. So now this is the active the active put I have, and kind of what I'm hoping is that the uh, by this date, March 21st, NVIDIA is at or above the 114 strike. So with current volatility, who knows? I mean, it's been bouncing all over the place. So we'll just kind of again just see how it looks next week, and as usual, just make a decision from there. Okay. And then on Monday, our usual buys. Nothing to really call out here except that the buys, the actual price for the two ETFs are down, which we'll see in the overall account balance. And so the good thing is that as we're dollar cost averaging in, it means that we are buying more shares than usual. So we're buying at a lower price. So when the price does recover, we'll have even more shares at the lower price to pick up gains. And you can see again for same thing for DIVB. So then when the price was above 50, we're getting like 1.25 share per buy. Now that the price is under $50 per share, we're now getting two. We're now buying 2 shares with our $100 and a little small partial with the whopping 84 cents left over. So that is the week. Again, our usual buys, our JEPQ dividend, and rolling down and out the NVIDIA put. So turning to overall account balance, probably no big surprise that pretty much everything is down week over week. So it's going from the top, SPACs, no big call out there, except that to reiterate, and if you're new, you may have heard this before. Cash is a position, right? So that means that when there are dips, having some cash on hand will allow you to capitalize on those dips and buy cheaper shares for the future, or do some other things as well. It also provides stability for the account, as the account can only go down so much when you have a percentage in cash. SCHD down, but of everything here, right now the only one positive for the year at 1.5%. And as I've been saying for the last couple of weeks, it has not had its Q1 dividend yet, so that will certainly help. JEPQ really getting hammered the last last couple weeks, and even though JEPQ is a kind of a synthetic covered call ETF, so I think with just how covered calls work in general, right? You get when the market goes down, you do well on the premium that you sold before it goes down, but you still have the underlying as well. So the underlying will often the decrease in the underlying can negatively outweigh the the benefit of the covered call. So again, if you're long shares, you're not concerned, but from a covered call ETF standpoint, just one thing to keep in mind: there's no magic bullet. So even a covered call ETF can hurt in an environment like this. But again, as I mentioned with SCHD, even though we're not putting money into the ETF, by having drip on, by reinvesting the dividends, we are still increasing our share count. So that at the beginning of the year is about 119. Now we're at 122. So when the price recovers, that's three more shares benefiting from that price recovery. FNILX kind of same boat, down over 5% year to date. And then our two have, top, kind of a top two stocks, $1 trillion mega caps, Apple and Microsoft down pretty big. So they kind of been, you can say, jockeying back and forth for who is the worst performer of the year. It was Apple, that was Microsoft. Now it's back to Apple being the worst performer of the year for this account. And then our new to the account ETFs, DIVB, CGDV, those are both now negative for the year. So there's been about just shy of $1,000 put into each. And as you can see, they're well under 1,000. But again, with these two, we are putting in money weekly. So if the price, continues to go down, we're buying cheaper shares, and then when the price recovers, which it will, then we'll be in really good position for growth. And then lastly, our NVIDIA put. So I've added before I'll just add in just NVIDIA CSP. I've now added in the going forward. I will add in the strike price and expiration date so you can understand or have so it can kind of make more sense on why the price is what it is. So remember that was sold, as we saw in the activity for the week, that was sold at about 695 and it's now at 840. So it has gone in the wrong direction, but there is still time left. And what I'm kind of hoping is it can at least stay, NVIDIA can at least kind of close next week in at least the kind of the 110, 111 range. And then that way can potentially do another roll down and out or even take assignment if it looks like it's primed for a rebound. Okay. So altogether, the account balance is at 44,002 bucks and 46 cents. So that is the lowest overall balance of the year. Certainly, the Nvidia put is weighing heavily on that price. But then if you look at the long range, if it weren't for selling puts, the SPAC's balance would be a lot lower as well. Um, so kind of like another way to look at it. So right now it doesn't look good, but overall option selling has helped the account year to date. Okay. So from a dollars perspective, gap perspective, that translates to being down $788.17 for the year, which represents a percent decrease of 1.76. So, like not obviously not where we thought the account would be at this stage, given the pretty solid start to the year. But again, there's a lot of good things happening. Again, we're dollar cost averaging. We're kind of trying to play smart, not too aggressive with the options, and we also have a good bit of cash in the SPACs money market to kind of weather and capitalize on any dips. So that concludes the week 10 recap. I hope everyone has a great week of buying, trading, selling whatever your plan is. Again, like I always say, don't get too emotional. Stick to your plan, and remember, you can always zoom out and you see the market. You know, the market is very resilient and always comes back. So it should be a very, very interesting week ahead, and I will let you all know how things go, of course, in the week 11 recap.